CPI data released today indicated that Greece has stayed in deflation territory for the 7th month in a row in September. On the phone with me now to discuss how this figure lines up with economic sentiment in Greece is Dr. Savvas Savouri of Toscafund Asset Management in London. Savvas, how does today's figure compare with claims earlier this week that the Greek economy has stabilised?
Well, I didn't believe those claims when they were made, and I think the CPI data is telling us that you've got weakening demand, and if anything, the CPI figures are probably overstating pricing. I suspect that underlying inflation is in deeper deflationary territory than the official figures are suggesting.
The IMF does not seem convinced either, as it also commented this week that the net foreign positions of Greece, Ireland, Portugal and Spain will still be minus 80% of GDP near the end of the decade. Do you foresee any return to growth for Greece next year?
Well, first of all, I don't agree with the IMF because I think they're actually being overgenerous. I think they're exaggerating, even by suggesting that things will be worse. I think they're not assessing just how bad they will prove to be in those peripheral economies. These are economies that are going through some very, very significant demand shocks, negative demand shocks. They're not going to trade themselves out of into recovery. So I think expectations for them need to come down, and need to come down sharply.
Savvas, what are your forecasts then for what we can expect?
It's been a difficult job to do because the figures themselves are open to manipulation. I think that you're looking at a contraction of, I think from where we are, you could still see contraction in the region of 3-4% in real terms.
Should Greece achieve a primary surplus, this would allow the country to seek further debt relief from European partners. Is this a route the Greek government is likely to go down, do you think? And what response do you think it would garner from other member nations?
Well, it has no alternative. It has to do this. It's big debt. So what you have is a paradox. In achieving a primary surplus, which is demanded of it to get more debt relief, it's putting more downward pressure on consumption because it's raising taxes and cutting spending. So what you have effectively is a process of economic destruction. But there is no, as I mentioned, there is no alternative. Unless you have a concerted effort amongst all the peripheral economies, if the leaders in Portugal and Spain align with Greece and agitate for less punitive demands upon them, will have to continue to abide by what is asked of them. The problem is that they all see themselves as being quite different. So there's no sort of peripheral or pig collective. You don't see the French, you don't see the Irish and the Portuguese and the Spanish and the Greeks and the Cypriots meeting together to discuss their best response. Were they to do that, I think they'd be in a relatively strong position, but they're not doing it.
And lastly, is this news likely to reposition Greece as a location for foreign investment, do you think? And similarly, can we expect a euro response?
Well, first of all, you're seeing opportunistic investing in Greece. Investors have different views on where any country is or any company is in its recovery plan. And there are those who think that Greece has seen the worst, as indeed there are those who think that Spain and Ireland have seen the worst. I don't subscribe to that view. And I'm not quite sure what the euro is actually not moving because of events within the eurozone. The euro is moving because of what's happening across in Washington. And if there's one thing that stands out alarmingly, is that this time last year, or in the summer of 2012, the euro was edging lower against the US dollar. It was moving towards 115, if not lower. Since then, it's been pushing higher. And as I mentioned, for the eurozone to achieve any sustainable recovery, it needs to trade its way into growth. And it can't trade its way into growth if the currency is going up.
Savvas, many thanks for your comments. That's all we've got time for right now, but I'll be back shortly with a closer look at the Russian economy. Goodbye for now.